Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson here with a breakdown of the action in today's session, where we saw the losses continue today, aside from the Dow, which did eke out a small gain. But all in all, it seems like the bear market is worsening, Ed.
Yeah, we saw the Nasdaq and S&P hit bear market lows once again. Do want to look at a few stocks that are at least holding up reasonably well: Cheniere Energy, Commercial Metals, and Decker's Outdoor.
We'll take a look at those stocks for your watch list potentially. But first, let's take a look at the major indexes. The Nasdaq today finishing down 1.1%, the hardest hit. We also had the S&P 500 down almost 0.7% today. The Russell was almost flat, down just a smidge less than 0.1% today. And as I mentioned, the Dow did eke out a gain, up just 0.1% by the end of the day, after being up quite a bit more earlier on in the session. But even though there was a little bit of an intraday rally attempt, not a good close at all for the Nasdaq.
No, and it was a roller coaster day. I mean, we hit lows pretty early on, rebounded. The Nasdaq actually turned higher briefly, and the Dow was leading the way. There was even talk that it was, showing a real strength in the Dow, at least on a daily basis, but faded again and faded really hard later on. The Dow rallied. I mean, one reason we don't much because it's just the size, one side engine that helped really push it higher. It's relatively high priced, and so that gave a big lift to the Dow. Nothing wrong with Amgen rebounding like that, but it's just when you have a stock like that moving like that, it can move the index. So
yeah,
the Dow was up
30 stocks.
Yeah. Yeah, so it rose, but it's not the trend is definitely weak. You're looking at that. Even the Dow, it was hit resistance around the 10-day line. I mean, they're just not. We're not really showing a whole lot of power out there. And some stocks are holding up, and you should keep looking at them, but just knowing that some of those stocks hold up and then they don't. A lot of the leaders, really weakened over the past week.
Yeah, and looks like the Dow is about 2.7% below the 21-day line, as its rally attempt is still intact here. But going back to the Nasdaq, we could take a look at this on the weekly chart. As you said, Ed, we are at bear market lows here, and now this third leg down is looking more like an actual leg down. Is that maybe a good thing? If we can come down a little bit more, might we get on the other side of this thing?
I mean, maybe the economic conditions are interesting. Look, we've got some, the producer price index tomorrow. We have the Fed minutes tomorrow. Then we have the big Thursday's consumer price index. We need to see some positive news on the inflation front or the jobs front before the Fed will say, let's slow this down. And that might be what does it. It's not a guarantee, because the economy seems to be looking to go into recession. We have a lot of corporate warnings out there, and that could get worse as we hit earnings season really over the next few days. It really gets going. So that could be it. We're closer to the end. I mean, every day we're one day closer to the end, but you don't want to bet, well, here it is, because you could have said along the way, this looks like maybe the end. This looks like maybe the end. Maybe it will be. But right now we don't have any real indication it is. And even if we do get like a follow through day, even a strong looking one, it isn't necessarily a guarantee that everything's going to turn out all right.
Exactly, because even though the Dow is just 2.7% below its 21-day, the Nasdaq is 6% below that level. And as we can see, that's definitely a level to clear and stay above, even just as step one for things to start looking better, I think.
Yeah, we just aren't even there. We need to take a few steps before you can think maybe we can run.
Okay, well, let's also take a look at the 10-year Treasury Yield 0 TNX continuing higher once again, Ed. The last time we saw the 10-year yield get close to that 4% level, that is where it bumped its head. What do you think about at this point? Is that going to continue to be a ceiling, or not?
I think the CPI report is really going to tell the tale. I mean, it's hard to see if that can go over. And the market rallied when the 10-year yield sort of came down, and the 10-year sort of bounced back up. We're really getting at high levels. You could see it break higher and then come back down. Sort of like the reverse of the stock market. But you just have to see, and it's like, you don't want to making those guesses because there could be violent moves one way or the other, or both. I mean, you could see a move where the 10-year yield surges to 4.08 and then comes down to 3.9 in a day. And if you've made the wrong bet at the wrong time, things can go very, very ugly very quickly.
That is so true. So just putting things into perspective here on a monthly chart, getting very close to that 4% level once again, which would be the highest level in a very, very long time here.
12 years.
12 years. Let's also look at the weekly chart. Look at how many weeks up in a row. I mean, we've got to assume that at some point that winning streak will end. But like you said, we don't want to just bet that it's going to, or else we could have done that weeks ago.
Yeah, and there was a ton
weeks ago it was still up, however many weeks in a row, impressively.
And it could drop for a couple of days. Like last week, it had a couple of big moves down, and then it rebounded. Still ended up. So you can be saying, okay, we're due for a drop, and it's like, well, yes, but maybe it won't happen, or maybe it'll be so short-lived that you won't even see it on this weekly chart.
Yeah. All right. Well, our eyes are looking ahead to that Thursday CPI report. But in the meantime, let's check out some stocks for investors' watch lists out there, starting with LNG, Cheniere Energy in the transport pipeline oil and gas group, which ranks number 3 out of 197. It's been holding up better than many, many stocks out there, Ed.
Yeah, when a lot of other oil and gas producers came down quite a bit, this one held up. It didn't surge like some of those others did with prices. I mean, this was really more based on the spread between, U.S. natural gas prices and European natural gas prices. There seems to be strong demand indefinitely going forward for that. This is just holding up well. I don't really see a great buy point today. I think on a weekly chart, it sort of bounced off the 10-week line. So it came right off of that. So it's acting well. It just seems like it needs to set up again. But this is one that definitely should be watching closely. RS line holding up. It's holding key support levels. There's a lot of good things about its fundamentals. So it's just one that's been a real leader in 2022.
Yeah, it seems like if you were going to buy something off of that, first pull back to the 50-day, it seems like that reversal week in strong volume might have been the time to do that. Now at this point, does it need to tighten up for a little while longer and pause here? That might be a welcome development. Let's also take a look at CMC Commercial Metals, trying to get back above its 50-day line and the round number at 40. It's got earnings coming up in 2 days. Potentially that's the next catalyst here, Ed, for a stock showing an RS line blue dot.
Yeah, if this were a better market and if it weren't for earnings, it would be flirting right with a buy point, getting right above the 50-day line. You got a trend line and exactly where you draw it. It's either on it, above it, or just below it. So we're going to get commercial metals earnings on Thursday morning. We're also going to get the CPI. So if the earnings are strong and the market is looking good, then you can start thinking, well, okay. But that's a couple of big ifs. And right now, I mean, you combine bear market and earnings and all that with the big report. Shouldn't be doing anything with it right now. But, this is also the first of a bunch of metal plays. So this will be one to watch, even if you don't want to get into this one. Steel Dynamics and others will be following in the next few weeks. So, we'll see if this one can do well. A lot of stocks have set up and then they break down in this market. So just one to watch.
Yes, exactly. Just because we are seeing these setups and stocks flirting with buy points doesn't mean we should be aggressively buying anything and everything that is presenting a potential actionable opportunity, because we've seen a lot of bad that's happened after some glimmers of hope, I'd say. Well, let's take a look at Decker's Outdoor, another setup that we're watching, finding support at the 50-day line. Really, all of its shorter term moving averages, which are converging and stacking the 10, the 21 day, the 50 day, as this stock is looking to hold up after bottoming, somewhat of a turnaround here, Ed, but a relative strength line that is definitely headed in the right direction.
Heading in the right direction. It's holding support, as you say. It's been consolidating for a few weeks. It needs at least another week to have a base, probably like a week and a half. So there's some things here. The Hoka running shoe brand, really hot right now. So that's driving growth. They have a number of different footwear brands. That one's the one that's really leading things. So this one's doing all right. This one's definitely doing better than a lot of other footwear plays. So that is an issue because you'd want to see a leader in a leading group. This one's more of a leader on its own, not entirely, but it's in that sense. But one to watch. Maybe you can form a new base. Maybe, again, and then if the market shapes up, this might be one that could be interesting. Again, this is just definitely a time to be looking and preparing. And you're on mute.
Very well said there, Ed. Thank you so much for that. And thanks everyone for tuning in. And we will be back, of course, tomorrow morning with the latest on IBD Live, where we'll be breaking down our take on overall market conditions, portfolio management strategies for the current environment, and so much more. So we hope you join us along with Mark Minervini, our special guest on tomorrow's show, two-time U.S. investing champion and trading guru. What more can we say? He'll be joining us, investors.com/IBD Live, for all the details. We'll see you there 10 minutes before the opening bell tomorrow, and we'll see you right here after the close.